Alright, hope everyone's doing well. I'm going to start doing a pre-market review of mainly the dollar yen, but I'll probably talk about the euro dollar and a few other markets like that as well. So with that said, let's get started. Daily chart. Really, we had ever since this day on the 15th, we had a surprise breakout and a little bit of follow through and led to three pushes up and it tested the highs up here. Sell climax, we went above this high, forming a triangle, possibly some sort of final flag on the higher time frame chart. So, at some point, we're we're getting a breakout, pullback, a breakout, pullback, breakout, pullback. At some point, we're going to reverse down. Now, this is a tight enough channel that I still think we'll get a second leg up, and we may end up testing these highs up here. For a while, I have been saying that I think we will test up to this high, and I still do. Here's that lower high I was mentioning right here. So I think we'll get above it. This is the month. This is the monthly chart, and really you can see this rally is due to the stop entry buy triggering. Weekly chart, consecutive bull bars, so good for the bulls. Probably always in long. And as I said on the daily chart, at least a second leg up. Probably will get above this high. And then if the bulls are lucky, maybe get some sort of double top. Takes us above this high. 60-minute chart. What do you, this is a 15-minute. 60-minute chart, what do you see? For the past many bars, we're in a trading range. And as you can see, depending on how you want to draw it, we are somewhat in the middle. Now, basically a second entry short. It's kind of a, on a 30-minute chart, it's a second entry. So really, I think this is going to trigger. I think we're going to go a little bit lower. Now, how much lower, I don't know. When I look at this, I see a trading range. We broke out to the downside, had confusion, second leg down, turned up. Broke out to the upside, but second leg trap, one, pullback, two. So, I think the market, in the grand scheme of things, the market's very neutral. Here's a 240-minute chart. Do you really want to be long above that bar? No, probably sellers above. You probably have buyers who are bulls who are disappointed, scaled and lower, trying to get out of break even. So, what do I think is going to happen? Well, I see three pushes up. 1, 2, 3. So I think we're going to get two legs sideways to down. Is this the first leg down? I don't know. No, I think ultimately we're going to test down to here. Strong rally. Gaps have been closing. So I do ultimately think that we will test down. I'm going to get rid of that line. I think it's really not that important. But anyways. And so what are the targets? Well, obviously higher lows. And as well as these higher lows. So what are the odds that we test? Well, either one of these higher lows. I think it's pretty high. If I was long, at least on this time frame, I would not have a stop below this low. You could, but I'd keep my stop down here because I think the odds are high that we're going to get below this low. It's a trading range. And we've been in a strong trend for many bars. And at some point, traders begin to realize that we're evolving into a trading range. So what do? Well, they want to buy at obvious support. Where is obvious support in a trading range? It's breakouts below lows, especially stops. So if you think about it, a trading range is a magnet for stops. So for example, buy above this bar, put your stop below here. Well, you've been in a trading range for quite a few bars. So even if we get to a new high, we may reverse down, fall below this low, and turn back up. You let me think of a different example. Okay, second entry trader buys above this bar. They put their stop at one, a few pips below. Well, price falls below, turns up. That's what a trading range does. Because bulls know that bears and bulls both know that sellers will sell and they'll exit below this bar because bulls will buy. So let's see, 15-minute chart. We have, as I said, bear breakout, 3 or 4 pushes down, bull breakout, 2 or 3 pushes up. I still think we're going to test down. So, I think we're high up in the trading range. So, personally, I would be looking to sell and use a wide stop and scale in. And, if we get a bull bar looking like this over here, and then another bull bar, I'll change my mind. And I'll be wrong. But until then, I think we're going to test lower. So when I look at this bar, I'm thinking bad risk reward. So a trader who's buying anywhere up here has a stop at a minimum down here. They're 1-to-1 risk rewards up here. And I genuinely I think the odds are that a bear has a better chance selling target down here with the stop somewhere up here. So I just don't think the risk reward's that great, and I think it's a limit of the market. You have big risk for stop entries and not great reward. But traders are scalping. So let's look over here. If a trader sold it, so the low of this bar is 13.34, which means their stop, if they went short, they get filled at 13.33. Price went to 13.24. So it was basically a 10 pip trap. So you had so many traders trying to scalp. Bulls knew that, so they started buying down here, hoping they could make 10 pips. So I'll look at a few. Another market I thought was interesting. I was kind of watching. I was looking at yesterday. Dollar Canadian, pretty strong. We had many bars down, and tried to break out to the upside. Basically, 50% pullback, then sold off. Over the past few days, we've had consecutive sell climaxes, best looking bear bars at this move. We went above these highs just barely. Well, did we? We went 1 pip above this high and sold off. So it's always interesting. You got to be careful if you're selling this close, putting your stop up here. You have to be careful because too often price will test all the way up and go a few pips up and reverse back down. And the reason for that is this is a major lower high, and as long as we stay below it, everyone concludes we're still in a bear trend. Well, even if we get above it, more people will conclude we're not in a bear trend. However, what are they going to think we're in? Well, they're going to think we're in a trading range. So even if we get above this high, the odds are a trading range and not a bull trend. So many traders they'll sell here and they'll in fact sell more up at this high and put a stop somewhere up here probably. Euro dollar. So again, we broke above this high. In kind of the same situation. Best looking bear bars, exhaustion. Trying to break above, probably going to form a trading range, so probably sellers in this area scaling in higher. And we probably will not get a measured move up. Tight enough channel, probably. This is a trend line break. Probably have to retest and try and form a major trend reversal. All right, hope everyone has a good morning.